Don't stop. Stop.
Kebab and Pepsi. Is it anything better? Let me just open up my tin. So, if anyone is watching and you want to ask any questions, stick it in the chat. I'll be happy to answer any questions you might have, if I can answer them, obviously. If you can't, you're buggered. So, welcome to Mad Trading. One of the guys over on Twitch had messaged me and sent me an email, for enough, because I give out the Mad Trading email address, which is madtrading@yahoo.com, just in case anyone wants to email me. And was asking, why I'd decided to do Twitch in the first place, and there's no one watching, no one cares. Yeah, I know. Thanks for the comment. But it's not about this Twitch and YouTube thing. It's not about trying to sell you anything. It's not about trying to make you pay for things. It's not about, in a couple of videos time, I'm not going to shill some kind of Instagram trader and say, oh, you got to jump on his signals, that's where I got mine from. That's not what this is about. Pretty much the YouTube and Twitch thing was going to be on the cards for a while, and a friend of mine, let's call him Ron, if you were tuned into Twitch before, you would have heard me talking about Ron, and the other guy who's not Ron, who were people I'm texting about trading. Ron had mentioned to me that it might be worthwhile doing a small account build-up. Not one of these challenge things. I'm not going to do a £1,000 to £10,000 challenge in a month. That's ridiculous. I can't do it. That's not how I roll. And I do roll. But I'm doing a small account, £1,000 account, and I'm just showing people live on Twitch and here on YouTube what it takes, what I think it takes anyway, to build up that small account. And currently, with the trades that I've had going, we're up 9.8%, which is a measly 0.6 ratio. Those are the figures you can see on the screen now. We have one DAX trade that was split into three, and yes, I know they're small. They're 50p per point, or 75 pence a pound a point. That's small trades. Yes, it is, but you can still make £98 in 2 days worth of trading, 3 days worth of trading. What day are we on today? Is it Monday or Tuesday? It is Tuesday, so that's 3 days worth of trading. And I really didn't do anything until Friday evening, and that's when this DAX thing kicked off. If you weren't aware, which I doubt anyone is, I tend not to go in at market. I tend not to hit the buy or sell buttons as I'm looking at the market. I tend to put an order on. So for now, a break above this 2460 level on natural gas could be a buy order if it were to break out. And that's a touch here, a touch there, and this consolidation is a rising wedge, or a bull flag. There's the pole, and price is getting smaller and smaller. If it were to burst through, that could be a entry. It's not my system, my strategy doesn't allow me to get into trades normally after market close, 4:30, 5 o'clock. I've made an exception on this small account because this takes me back 6 and a bit years, where I had a small account. It wasn't as small as this, but I had a small account trying to build it up, and I had to go back over a few PDFs and a few strategy guides that I had, to just remind myself what it is I needed to do for a small account. I've been telling people, whoever wants to listen really, either at my work or through other medium, how I trade. And I'm not an educator. I'm not going to teach someone how to trade for profit. That's not what I do. I have done similar things in the past, and it's backfired, not because of the trading, because of the people. People tend to be complete gits, if I'm honest. But anyway, so I'm not going to teach people how to trade. I'm going to show people how I trade and what it takes for a small account. So this is just a quick update on the trades that have been taken. Let's go back onto the tradable time limit. So way back here on Monday, yesterday, we were taking him on a trade when it nipped up past our entry point here. And then, yes, we had to endure a bit of a slow death of the price as it dropped all the way down and then bounced off some moving averages and kept on going. I took partial profits at this point here. This is the second natural gas trade of the 3 days. So yeah, I took partial profits up here at natural gas. Took partial profits at 2453. That gave me 38 points. Only because it was or it is, should I say, a hard line. That's a decent resistance level. Obviously, if it pops through and price comes back down, it could be a potential support level. And I don't normally, in my other accounts, I don't normally trade support and resistance. I have a purely mechanical trading system. So I don't tend to look at support and resistance. But for small accounts, you not have to, but I have to take profits. The name of the game is to grow your account. It's not to do 8 trades in a row that all lose, and then you haven't got enough money in the account to do trading. You've got to look after your equity. You've got to look after your trading balance. If you've got no money in your account, you can't trade. So I've had to rejig my thinking ever so slightly, get my mind retuned into the way it was 6 or 7 years ago. It hasn't really changed much, really. Not a huge amount. But for the small account build-up, or building a small account, you have to take the profit that's given to you, and it's a give. The market is giving you money. There are other ways of thinking about it. You're taking money from the market. Yes. But in order for you to win, someone has to lose. This is not a zero-sum game. If you don't know what I mean, Google it. Google the shizzle out of that. Zero-sum game. It's not a zero-sum game. Someone is losing, or lots of people are losing, for you to gain. And it's not equal. So that's why we have market makers. That's why we have quite large, affluent pools of cash that are used to pay people like me. But on the other flip side of that, when you lose your 50, 60 quid to your broker, they don't put that into that big pool of cash. They keep that because you're betting against them. You're not betting against the major market. We won't go into market makers and deal through brokers or dealing desk brokers. We won't go into that at the minute. But anywho, we jumped in on this natural gas trade. Let me make it a little bit bigger. Way back here at around about 12, it was 12:05. I shouldn't have been in at that candle. I needed to have waited until a candle had popped up and closed above. And if you look on the 5 minute, it'll give you a better view. And I was waffling away on, I think it was on here actually. I was waffling away and I missed the entry. I put the buy order in before it had popped through. I should have put a buy order for this candle, which would have probably taken me in here. It's fair enough. It still would have, and it did take me all the way down here. No problem. You've got to give a trade time to play out. But it's just the process of it. You've got to stick to the process. You've got to be consistent in that approach. Consistency is key. And then, we just let it ride, let it go. Lots of push up towards the end of the day. And then we took partials here. That's 75% off. Let me bung it back to the 5 minute where I notated it. So we took 75% off at 24.53. So it's 25 pence left to run. That's 25% of the original risk. Risked £100. So far, we have made 28.50, which is not about the money, but 28.50, and now we've moved our stop up to this location, and we can only now lose 14.62. We can't actually lose that because my strategy will get me out well before that. So I'm actually in profit again. I can't lose cash, not unless something happens during the night. I don't know. Another war kicks off, and people say they're going to sell off whatever gas that they've come across for pennies, and the price of gas will momentarily fall through the floor. In which case it's got to move quite a large amount. It's got to move 100 points in order for me to lose this 14.62, which is going to be very, very difficult. So I'm actually expecting it to pop up through, certainly on a 5 minute. If you look at a daily, that's a good move up. Stochastic has turned. It means nothing because it turned here also and then fell over. So we don't use what am I talking about? I don't use the stochastic or the RSI or anything like that as a trade trigger. I use it for confluence. I use it for excuse me. I use it for information purposes only. If there is divergence in a stochastic against the price and it's in my favor, then I add that to my little knowledge base, and I'll make a decision based on both of those factors. If there is convergence in the way of price, then I'm probably going against the natural flow of price, which is something that I'll also consider and either will or will not take that trade. Anyway, so I'm expecting this to continue on up in the short term at least, and even though stochastic has been overbought, which isn't even a thing, but everyone expresses it as an overbought condition, if and when this price pops through, if I'm up, which I probably will be, I'm going to be doing a late one tonight, I might put some extra, not double down, but I might put some extra cashish on this trade. Failing that, when I'm up tomorrow, I'll be looking at the markets from about 7:15 tomorrow. I'll be live on YouTube and then Twitch from early on. If it's still within a certain parameter, which my trade plan and strategy allow, then I'll jump back in on that trade. But yeah, for the moment, we've got a long on natural gas. And I'll leave that there. We also, I'm going to cancel this now. But we also, I mean, I'm going to cancel it now. I was going to cancel it, but I've set this up twice, but I'm going to leave this to go. One, because my trade plan tells me to do so. My strategy is quite stringent. There's a bleeding flying thing going. Bugger off, small flying thing. Get away from my fizzy carbonated drink. Yeah, my strategy and trade plan tell me that I'm going to get in regardless. It's a break of these three major wicks. I know there's four, but these three major wicks that are kind of close together, coupled with another one or two bits of information, tells me that it might well break to the south, touch at least S1, hopefully break the 1 hour resistance on the way down, or support, sorry, and then would make it somewhere between the hourly resistance and the weekly. Support. So hourly support and the weekly support. So I've just bunged a small 25 pence per point limit order on, or an order on, which I know that it's a £50 risk at the minute. But it wouldn't be anywhere near that. It would be down around about the dailies. But when you look at the hourly setup, it's got to be well out the way of these wicks. I mean, you can get a candle come back up to the daily and then wick up, and it might take me out. First thing, we'll have to see what the 8 o'clock candle is doing, and then that's on a 15-minute chart, and I'm not really hopeful that it's gonna take me into this trade. Hey, Ron approves of small account building. Like it. If anyone else in the future is watching this is Ron. This is the Ron that I'm talking about on Twitch. We've got Ron and not Ron. So morning, Ron. Welcome. So here on the 15-minute, that's the way that the 15-minute strategy is telling me to go. But if you look at the hourly and take a quick snapshot with your head, and then you look at the daily, they're telling me two different stories. So we can either go with the long-term daily idea, and the daily idea is telling me that this is 3 candles down. There's no major wick to the upside, so it's weak. If there was a major wick to the upside, like up here, then that's a strong reversal. It's a strong no. Why don't you take your sausage and shove it kind of, information, and it will flow down. Similarly, this wick to the downside, even though it's a red candle, the wick to the downside is indicating that buyers were pushing that back up again. They really wanted to throw that back up. Indecision, and then it jumped up or it gapped up. So here on the daily, there's no wick to the upside. There are 2 wicks to the downside, which does indicate that it's going to push up, but stochastic, I don't know. People do trade off the stochastic, I don't, but stochastic is about to, on the daily, cross over to the downside, which might indicate further downward pressure or movement. And if so, it wouldn't be where my take profit is now. It'll probably be in the middle of these, so 5,650 roughly speaking. We could throw a fib up there, but it's not going to make much difference. And on the hourly, it's pretty much the same chart. Hourly, daily, hourly, but it's showing an opposite to the daily. So there's big wicks north, which indicates big buying pressure pushing back down again. There's lots of big whales, big people, institutions pushing this price back down again. I don't want it to go past this 5,950 that I've put up there a couple of days ago, and it's pushed all the way down. Sellers have stepped back in again. They didn't want it to go past this 5,850, bloody flying thing, and to the wick, to the point, pushed it back up. So that's a lot of buying orders at that location. So we might see this push down to around about the 5,850 again, which would be a 3-touch, which would be a treble bottom. At the minute this is a double bottom, but it's too close to be called a double bottom because it's the same, it's only seconds apart. The hour candle finished, next hour candle opened and bang, went up. It popped down but went bang up again. So this is telling me that it is going to fall over, but then will either slowly trickle down and then shoot off, whereas the daily, don't worry, I'm getting somewhere with this, the daily is telling me that it wants to push down, but there's no there's no selling pressure. There's no big wick that came up and then sellers came in and pushed it back down again. They're just looking at a bottom. They're not looking for a top. Did I get it? Did I get it? Oh, squish. Squished it. It's okay. It's okay. I killed the little flying thing. So I take the daily as the major information, and I look at the 15-minute. And although I did have a couple of sell orders, one that lost, I got in here, got out there, didn't lose a lot. I got in there, and then, well, here it was actually, and then got taken back out again because my system tells me to. Where did I get out? Where did it get me? Here, on a lower time frame. So now I'm following the trade plan and the strategy, because that's what you do. You need to be consistent in what you do, and you need to give trades time. Don't worry about them. Don't worry about the money. If you're happy to put that money on and lose it, fine. That's your risk. Leave it alone. Don't worry about it. If your strategy tells you take partial profits, take partial profit. If it profits, if it says to leave it on overnight, then leave it on overnight. But anyway, so I can see that this probably will push down, but it won't give me my 25 quid back, or my small amount back. It'll probably bounce off of this hourly resistance, which, if we look back on the hourly, so 5,794. Ding ding ding, 5,794. Oh, give me strength. 5,794. No. 5,794 is this one here. It probably won't get down to there because of these big major wicks on the hourly. It'll probably slowly swing around and then pop back up again. So that's what I'm going to get rid of this trade probably in the next half an hour to an hour. I set this early on. I set this to the base of this candle, so I was at 7:15. I believe might have even been this candle. Whilst talking to not Ron and Ron on their separate chat. Anyway, so I'll leave this on the 5-minute for now, because I'll be watching my stream whilst dealing with other bits and bobs that are going on around me. The only other thing that I was going to discuss this evening was basically a trade plan and your strategy. because my strategy is very different to most others, and it's not about whether my strategy is better than your strategy. It's not about whether the strategy that you implement, have been given, have bought, have seen, have nicked off of the dark web. It makes no difference about the strategy you've got compared to my strategy. It's all about whether it works, and you'll only know if it works by doing the back testing. So my strategy, and in a minute I'm not prepared to give that strategy out. I'm not going to talk about the nuances, the intricacies of it, not in open form just yet. But my strategy is extremely easy for me to explain. It might be difficult for me to actually get the words out, but it's very easy when you read it on a piece of paper, and it's even easier to remember it, which is golden. That's the key. That's the whole point. I did mention this earlier on today, I think, whilst on Twitch, not entirely sure, but there's a chap that I talked to on a Discord channel who I've known for many years. I don't think he'll care. He doesn't want me to give out his name, obviously, but he was in something called the Apiary Fund, and you might have heard about that. You might now go and Google what that is. But he was basically early on besotted by trading, much like us all, definitely like me, and did at the time Apiary were doing this demo account check. So you could do a demo account and you had to give them full and free access, and you had to send it off weekly, and as long as you were doing X amount of trades at a set amount of risk and you made X percent on the account, no matter what the size of the account was, didn't make any difference, then they would consider you a decent enough trader and they would give you money. Anyway, so that's how he started. And I believe he left there after being funded for a while. He sold lots of things that he owned. One or two he didn't own, made a bit of money, and then buggered off somewhere, and now doesn't live in Britain, and trades quite happily, making a decent living. And he's one of very few people I know that makes an actual living from retail trading. I don't know many that do. I know of lots who do trading for others. I know of a fund manager. He's a very small fund manager. He has a very small fund compared to other funds. We chat very sparingly. He's slowly moving up the ranks of fund managery type people. He'll probably forget me in a few years. But anyway, it's talking to him and talking to Ron and not Ron, and talking to the guy on Discord. It's not about the strategy, because we all implement very different strategies. It's about consistently implementing your strategy time after time after time. If you have 2, 3, 4 losses in a row, your brain wants you to think, hold the fish fash on. Wait a minute. What in Liverpudlian pie are you talking about? You're going to jump in on another trade. You just lost 4 in a row. Why are you getting in on this? It's going to be another loser. And then this is where the psychology side of life comes in. And then that 5th trade that you think, no, brain, shut it. I've given you enough sugar. You should be happy. Shut your face. And you jump on that trade and bang, it's a loser. And then your brain starts clicking its fingers and whistling and saying, I told you. I told you so. Give me more sugar, please. So you throw another couple of tins of sugary substance down your neck to get rid of those bad thoughts. But then your subconscious starts thinking, do you know what? Brain's right. If you keep doing that, you're going to keep losing money. Even though The other half of your brain is thinking, but hold on a minute, you've back tested this, you know this strategy inside out, and you can have 5 losers in a row. You can have 10 losers in a row, as long as over the long term, your winners pay off all of your losers and make you a percentage gain. What does it matter? And that's what gets in our way. That's what gets in people's way. Doesn't matter whether your strategy is better than mine. Doesn't matter whether someone has sold you a strategy that's 70% accurate and 70% of trades, 7 in 10 are winners. It makes no difference. Makes no odds. Mine might be 4, 5, 3. I think the average is 4 out of 10 are winners. Makes no difference. Follow your strategy as long as it's a proven strategy that is consistently making you money over the long term. You follow that strategy consistently. You give it time. And by that I mean you can't just be in the trade and think, shit, it's gone against me. I'm 40 points down. That's X amount of pound. I can't afford to lose that. That's not the way to think about it. Give it time to work it out. If I was thinking like that, when this natural gas trade took hold here and got me in, I was down a little bit, yeah, no biggie. Up a bit, no biggie. Down a load. In fact, my stop was just down here, I think, if I remember correctly. I've closed my spreadsheet now. But that's a lot of percentage loss from entry here to there. Let's just work that out points wise. Excuse me for burping. I'm drinking some very fizzy liquids. So 56 points now in a small account with £1,000, and you've got £1 or 50 pence. excuse me, per point. That might only be £25. £27.50, whatever it is. It's not the money, it's the percentage. So if you're 56 points down, be that on £10 a point or £1 a point or 25 pence a point, that's still a massive difference between being in profit for 18 points and losing 56 points. But you have to think about it the same. You can't think, well, for jazz or this, I'm out. I'll take my loss, because if I had have taken a full loss there, just got out, lost my 56 points, which I think would have been around about 25, 26 quid, something like that, not a lot of money, I would have missed out on this move, which admittedly only made me something like 28 quid or whatever it is. But again, it's not the money. And let's see what that's made from there to there. 40 points. So about yeah, it would have been something like 20 odd quid, £28. I'm sure it was. It's not about the money. It's about the process. It's about the percentage gains, and it's about the consistency within your trading. This exact same, and I'm sure, Ron, if you're still watching, I'm sure you'll agree. I was talking to you about a trade the other day. Let me open that up. Actually, let me see that. This exact setup is exactly the same as a setup we had a while ago, which was. Let me open up my. There we go. That one. So it was a DAX trade. That's why. It's not natural gas. It was a DAX trade. We entered at 12.206.5. Went long. Originally 50 pence a point, which is why it's been split into 3. That's why it's all the A's there. And the first one only made 178.2 points. Only made 178.2 points. That's massive. That's absolutely dong fonging. But and I'm not going to pull it up now. I've closed it. But that was exactly the same as this. As it kicked off, we went through. I took partial profits at a set point. point. It moved up to another set point. I took another 50% off the table, which was this second one of 10, and I closed out the full position at 272 point from its original entry. So yeah, if that had been £1 a point, that would have been 178 points, with probably 70 pence a point, so it would have been over 100 quid. It wasn't, only 53. But all in, those three made me £106, I think it was, and it gave me 1 point something on the risk return ratio. It's not about the money. I should really block that out. It's about the percentage gains. It's about the return. It's about the process. It's about being consistent. And your trade plan that everybody seems to be going on about mentions literally nothing about this. Mentions nothing about your percentage gain. When I've been doing this for a while, and the first thing that I thought I needed was a firm and robust trading plan. Well, no. A firm and robust trading plan gets built up over time. Your trading plan should be as simple as, I'm going to trade blah between blah and blah, and I'm only going to risk X. If I make Y, I'll take a bit of cash. That's it. Over time, you can add gumph to it. You can say, well, I won't trade oil on FOMC. I won't trade the strange currency pairs. FX on a Friday, I won't touch. If Trump starts tweeting about going to war with aliens, then I won't buy Bitcoin. That kind of stuff. You can add that as you go on. But your trading plan is not the most important thing. It's important, don't get me wrong. But it's not the most important thing. When you're at work, and myself, Ron, not Ron, a couple of other people that I've spoken to over the years, when we're at work, if we step out that door to go to work, there's no form in front of us that says, right, put your left foot forward, look left, look right, look up, put your right foot forward, put coffee cup down on table. There's nothing telling us step by step what to do. It's all in your head. You know what you've got to do. It's automatic. It's autonomic. It's a given. You don't need to think about it. And that's what your trade plan is. It's something that just annotates or notates what you should already know. You go back and visit it every now and again, and you add stuff to it, and you make it a little bit more receptive for you, and you say things like, yeah, well, when I've made an extra 15% on top of what I made last year, then 50% of that I'm going to put away in an ISA. And you can add that, and you look at it and you go, oh, actually, I've not done that yet, let me do that. What's most important is just pay £5 to some lunatic on eBay to give you a trading strategy and follow it consistently. Excuse me, whilst I have some more sugary substance. Yeah, Mr. Ron, he does agree. You should be in that. It's not a lesson learned. If you're still in it, it's, that's not the point about being still in it. It's about following a trade. About following the. What the frick is the word? Not trade plan. That's why. Why is that the only word in my head? Strategy. Boom. Thank you. That was the other side of my brain telling me what to say. It's about following the strategy. And if the strategy says it's coming up for this resistance at 2460, take partial profits, let the rest run, then do that. You can't be going over in your mind, well, yeah, I should have been on that at £4 a point. I would have made, my month's wage back in a day. That's not it's not helpful for you. It's not helpful for your the longevity of your trading, and it matters not. It really doesn't. It matters not a jot whether you were in it for 2 pence, 50 pence, £4, or £25 a point. It makes no difference. It's the process. If you can do it once, and then you can do it again, and you can do it 10 times, you'll do it a million times. And out of those a million times you'll do it, you'll make a few mistakes, you'll make a few losses, but you'll make a lot more percentage return. Let me bring this back up again. Since Friday evening, these are the trades I've had, and that's one trade that was split into three, because I closed partial profits, closed 50% that was left, closed all of the trade here on the DAX. Had a natural gas that, I closed these partial profits, that's this one that's open, closed 75 pence, made that amount. Had two Brents that were losers. I lost this, it's small compared to my initial risk, and another natural gas which is part of this natural gas one that can't lose, it cannot lose any money. And out of those, it's not 6 trades, but out of those 6 decisions that I've made that have closed, it's made nearly 10%. It was over 10%, but obviously I lost a bit. Nearly 10%. If you forget this, let me cover that over. Forget the money. If you showed any major hedge fund group who were looking for a young, up and coming, full of jizz trader, if you showed them, actually, this week I made 10%, and the week before I made 4%, and the week before that I made 11%. As long as you're in positive equity and making consistent percentage gains, they'll throw money at you. They will literally say, we're closing down. Like Raffles, I read Raffles Bank is closing down their retail savings accounts because the law has changed somewhat. And if we do leave Europe, which let's not get into that argument, if we leave Europe, the law changes on overseas savings accounts, taxation, and how you can use it. That's why they're leaving the retail savings account, why they're getting rid of it. Not because they're bad at it, they're very good at it. Before Lehman Brothers were eradicated, Lehman Brothers were very good at it too, but they would take your savings, put it all into a big major pot, say to a handful of traders, 10, 12, 15 traders, here you go, collectively we've got 90 million retail money, it's in your bank, it's in your account for the this week, we need 15% back. On 90 million, to get 15% back would probably take professional traders maybe 2-3 days. And that's where you see these major moves. You see these major whale moves on a day. Let's get to a day on natural gas. You see these major whale moves here. That's not retail. That's not me and you. That's a institution, a bank, or institutional traders pushing price up there, buying, and then bang, they get to the top. Now I want to sell. And on this little sell here, on this little candle here, they take back 15-20% of everything they've put in, and then they'll just wait, and then they'll slowly trickle the rest of the sells and get all their money back. So they might, it's ridiculous how they do it. You can, and it's not because I've been there, watched them do it. I don't know anyone that does it, but as you read certain books and certain articles, you get to see there's a pattern in professional trader lifestyle, not their lifestyle, not FX lifestyle. Do not even give that man 1 minute of your time on YouTube. I'm not going to say the S word, but I don't believe that that is real. It might well be, but I don't think it is. And by you giving him a minute of your time, you're going to give him money through advertising revenue. Don't do it. But I wasn't talking about FX life, so I was talking about just FX traders in general from the non-retail side of life. They move things, as well as because this spot price isn't what gas goes for. This is the funded bet. A funded bet on an ETF of natural gas, not how much a therm costs. One thermal unit of gas does not cost £2,456. I think it. I'm not sure, but I think it sells around about 21 pence per therm in business. I'm not sure. Don't quote me. I could be talking out my ring piece. So this is not about actual natural gas. This is an ETF that's made up of other companies that sell and buy and hold natural gas stock. Read up through your broker how they've made their daily funded bet on natural gas. Anyway, freaking hell, waffling on. Look at that, it's nearly 10:30. So it's not about the money, it's about the process, it's about being consistent, it's about being able to say, do you know what, I'm going to lose that 50 sheets, no worries, it's fine. I didn't need it to buy nappies for the kid, I didn't need it to go off and get ice cream for this weekend. It's money I'm comfortable losing, it's fine, whatever, bye-bye. And you need to give a trade time. You've got to give it time to do what it's going to do. If you get into a trade and it goes against you and takes you out, then that's what happens. Every trader goes through that. Absolutely every trader will have at least one losing trade. Any trader that tells you that they are 90% profitable and only 10% of their trades in their lifetime have lost is either lying or so rich that they don't need a stop and they don't let it lose, which is ridiculous. Retail people can't do that. So you're going to have a loser. And I was saying on Twitch earlier, Einstein, have I still got it up here? Yes, I have. Einstein had a quote, and I'm going to quote this directly from Google because Google knows everything. Einstein once said that insanity is doing the same thing over and over again and expecting a different result. Yeah. So if you're doing the same thing every time and losing, how are you expecting a different result if nothing changes? You need to change something. You need to stop doing what you're doing because it's not working. So, for instance, if I had to put my stop down below this little candle here, still going at the same place, but put my stop here, every single time there was a gap and run, and I got took out, and I didn't change, I'm going to lose. I'm going to lose every single time. So if you're losing money, trading, change your strategy, change the way you think about your strategy, change the way you think about money. Conversely, or obversely, whichever one it is, I'm not educated enough to know what either of those mean. I don't even know why I said the words, but the opposite to what Einstein, the idiot, has just said is, if you're doing something and you're doing really, really well, don't change it. Why change a working formula? Just make sure that you do it consistently. That's my rant for this evening. We have two trades on. Two trades on. One is the natural gas. We are up, 40 points. If it does break through between now and 11 o'clock on this 2460, I probably will add to the position. Guessing that it won't. We are very much in overbought territory here on the stochastic, and on the hourly we are the same. It means nothing, by the way, because overbought stochastic here on the hourly also meant that it'll just pop down a little bit I'll say a little bit, that was a big bit, and then it might just move back up again, so it means nothing. We do have divergence on the hourlies. Let me get rid of this. We know about that, so delete. We have divergence on the stochastic, which is something that I do take into account. So we have a high on the stochastic here, and it crossed over there, but price didn't. Price started to cross here, but still a high on the stochastic there with a really high price. Big massive wick. We know what big massive wicks mean. The price moved down, and it went to the gap entrance, so it gapped up, opened up here, the price came down to roughly where the gap started, and then the stochastic started to turn over. We have a lower high on the stochastic, didn't breach the 80, only just though, didn't breach the 80, but price closed higher than the previous close. And then we have still a lower high than this, and it's very marginally higher than the previous part of the stochastic, but price rocketed, probably because there's lots of sell orders from Wales, dark pool trades, all set around 2460, or take profits, and that's where it raced up, and if and when it breaches through, or if it were to breach through, certainly on R1 dailies, you would expect it to get to an R2 daily. It doesn't, but people would have put a long order here, so that's why it jumped probably, and people got taken into a long, and it will probably lull them into a false sense of security and then fall back over. But we've got divergence, which means in a divergent state, and if I'm teaching suck eggs, guys and girls, if there's girls watching as well, which I'm sure there are, then please pop it into the chat. I don't want to be going over stuff that you already know about. But divergence, a high on the stochastic with a lower high on the stochastic, if this is a lower high, with higher price. Let me see whether I can do this. So we have, no, that's not right. Let me get rid of that. Go away. GIMP. It's that one. There to there. But here to here. It's not very clear, but you can probably see it now a bit better. It's coming, the stochastics are sloping down here, but stochastics are definitely shooting up there. That's divergence. It is diverging away from price. When this happens, you look at the stochastic and think, I think that price on this time frame for this instrument will be coming back down again. Ron, you stuck a message in. You'll have to say it again, because it wouldn't allow it through, dude. You have to annotate it. Do it in bit by bit. So divergence is a very well known about, used trading helper. You don't trade just because there is divergence. It would help you in the decision making process. So if it's not in by 11 o'clock, if it's not popped up above this and held above it, I'll probably not put a trade on and be looking for shorts, nice blue ones that come down to my knee on a shorter time frame, probably the 15-minute, if not the 5-minute, but you can see it touched the 2460 once, a couple of times, broke through it a couple more times, came back down again. This is obviously substantial in some way. This is obviously, something's obviously wrong here at 2460. People don't want to, or machines don't want to go through it. Retailers don't want to go through it. The big banks don't want to go through it. So something's up here. And it might be time for me to take the rest of my profits and say thanks very much. I'll have that extra tenner. That will that tenner would probably get me one kebab, a tin of fizzy stuff, and the rest of it goes to charity. So I would be very happy with that. It's a percentage increase. But if it pops up and it continues on, I'll also be just as happy to let it run. And I'm guessing it's going to get to around about the monthly, but it's got to break through this 2460 to start with. So yeah, we've got the natural gas on and the oil. I'm now gone 10:30. I'm now going to cancel this. So that's gone. I'll cancel these alarms as well. That was also set at the 80%. So before I shoot off and start to get my big fat schwad down ready for tomorrow's YouTube and Twitch sesh, I've already got around about 14 tinnies for me to drink tomorrow. I've got a bucket to piss in. I've got my phone on charge, and I've got some decent tunes to listen to. Oh, and a bag of salt and vinegar crunchy sticks, because tomorrow is the day I don't have to go anywhere, and I'm going to be trading. I'm going to be making sure that this gets to at least 15%, if not 20%, and that'll be on a 5-day trading sesh. That's not a guarantee. I don't guarantee it. I want that to happen. So before I run away, has anyone got any questions, queries, anything you want to talk about, anything you want to moan about, anything you want to talk to me about? Throw it in the chat. And I know there's about a 7 or 8 second delay, which is ridiculous. Excuse me, but if anyone's still around and you've got any questions, bung it in chat. I'll stick some tunes on and I'll give my voice a rest for a second. Yeah, there is around about, I've just counted there, around about 9-second delay between me doing something on the streaming software and then it coming through on screen. And one of the gentlemen that I'm talking to on a media account, he's popped up saying that pretty much he's got a long on for crude. Wants me to give some thoughts on it. This is one of the chaps who works off of trendline and support and resistance. For crude, I'm gonna say, let me just look at that picture you sent. Yeah, just 15 minutes. I would say that it's not. First of all, your chart doesn't look the same as mine, and I'm not entirely sure why not. I don't really understand why my chart looks very different. I'm guessing because it's zoomed in quite a lot. But I would have suggested that yes, price may slowly creep up to the area that you've notated on your picture, but it's long term. I say long term, we're talking on an hourly perspective. It may be about to pop up, but it could only pop up for a split second and then just fall over again. And it might get up into profit. You might not take it. Could be 3 o'clock in the morning, 4 o'clock in the morning. You might not be around. It might not hit a take profit target and then just fall out the sky. And on a daily, as we noted, it's a strong indication that it's going down, but that doesn't mean that it will. It could come back down to these lows of 5, 7, 8 yard, and they just walk away to say, right, I've had enough. The buyers can take over. My thoughts are to look on a shorter time frame to see whether there's some confluence in that. And let me show you what I mean. If you have a high there, touch this. So a high there, touch this trend line. Touch this candlestick with a trend line. Take it past the price, the current price, and then use this. Use this line, the bottom of this this candle as. Let's go there as the falling wedge shape, as it were, if that were such a thing. Yes, it can come down to anywhere around here and within the trend line that you've shown. And I know you've got another trend line, roughly speaking, around here. I might not be drawing it correctly, but for me, if it's going to bounce off a trend line, it's got to touch the trend line. For instance, it bounced off this trend line, it went straight through all of the moving averages and touched this trend line. On this one, it didn't. It touched, well, that's where you started it, I suppose, or I've started it. Trend line, touched some moving averages, went back up to the trend line. As long as your stop is relatively short, you're not risking too much money, and you don't think it's going to bounce back below this trend line, then what's the harm? If that's part of your trading plan, if that's part of your trading decision and your decision making, then what's the harm in doing that? If you think that price is going to get back up to around about this trend line before open tomorrow, so before way over here, then do it. Pop it in, see what happens. Part of trading is losses, and part of the losses is learning what's right and what's wrong. There's nothing wrong with trying out a strategy live. Nothing wrong in that at all. So if that's not even bothered answering your question, which I don't think it has, me personally, I wouldn't be in that. I would probably be waiting until tomorrow. My strategy tells me close now. It was down here, close it. It's not going to get there in time anyway, not before I go to bed, and start again tomorrow, 7:15, 7:30. I see you sent another one. Yeah, okay, yeah, then risk it. It's only a small amount, and if you make, then great. It all goes towards the percentage and your risk reward ratio. So yeah, I'm going to leave it. I'll start trading again tomorrow morning, early doors. If anyone is watching this late at night, if you're from the Americas over there, our very wealthy cousins in the good old US of Trump, and you're watching this now, which will be your, I suppose, early morning? Are you 4 hours ahead, 5 hours ahead? I'm not entirely sure. Then join me later when it's UK wake up time, 7 o'clock, or sorry, 7:30 UK time, whatever time that is, wherever you are. I should be live on YouTube and then again on Twitch. Join me. Tomorrow I'll be full of chat. I haven't got to go anywhere, haven't got to do anything, I'm going to pick anybody up, haven't got to go and moan at anybody like I had to do today. So it should be a full, fun-packed, boring day. That's what trading is boring. Other than that, have yourselves a good evening, and I shall catch you on the flip side tomorrow. Stay mad. Night.